Good afternoon, everyone. Today we're going to continue our discussion on portfolio and portfolio analysis using R. So last time we had the introduction to the concept of modern portfolio theory, MPT, developed by Harry Markovich in 1952 in his seminal journal article on portfolio selection. So we said that there are some fundamental concepts that come with the MPT, the modern portfolio theory. First is risk and return trade-off. So people who would invest in risky, risky securities or risky assets expect that they will be compensated for the additional risk that they're taking. Rational behavior dictate that people would not risk something where they will not be compensated in. So that's a cornerstone or landmark tenet of the modern portfolio theory. So ang expectation natin, the higher the assumed risk, the higher is the required return. Also, another cornerstone tenet or concept is diversification, which means that the types of risk that we are exposed to, systematic and unsystematic risk, of which the only relevant risk is the relevant risk is the unsystematic risk. Kasi yung systematic, we can't do anything about it. No? So it's a parang macro risk yan. We can't do anything about, let's say, if something happens in another country and then affected tayo, that's way outside our control. No? So ang tawag natin dyan is either political risk yan, environmental risk, market-wide risk. Okay, so these are things that that any investor would be exposed to. Now, yung unsystematic risk, ito yung ito yung ito yung diversifiable risk. So putting all your asset in the same, let's say in the same industry might generate a greater amount of risk kasi you're not trying to diversify your position. So that's what we mean by diversification. And then we also discussed briefly the concept of optimal portfolio and the efficient frontier. So let me just illustrate that. So we said last time that according to MPT, we generate what we call, so this is your expected return of your portfolio, and this is your risk. Okay, the efficient frontier looks like this. Okay. So this one class is your efficient frontier. Sorry, top portion of top, no? Because you can simulate several assets here, several portfolios. Okay. And given the same level of risk, this one. So this is the risk of our portfolio. So you have here several portfolios. And of course, the best performer will be this portfolio, the one which generates the highest amount of return given your portfolio risk. So all these assets in your efficient frontier here class are what we call the optimal portfolios. Okay, so that's what we mean by efficient frontier in regard to optimal portfolios. Okay, so let me close this. What we did last time, class, was to so make sure that your packages are already loaded. Quant mode, QMAO, performance analytics. Let me. What I did, class, was I emptied my environment so that we do this together. So I'm loading now the packages that we're going to use. And then let's identify the the stocks that we're going to generate. So let's use 2015-11. Last time we just used 2023. So just rename your start. And then end is 2023-12/31, and same assets that we were using last time. IBM, Bank of America, Wells Fargo, American Express, the Tower, semiconductor, and then Pfizer. All right, then when we run this, it will now generate some vectors here. Okay, so this is your character vectors. Okay, and then let's now load the assets. So get symbols from quant mode, tickers. We identify the start and the from, to, periodicity daily. And then auto data sign is equal to true. So let me run this. And now it will generate XTS objects. Sorry. Okay. These are OHLC objects, open, high, low, close, volume, and then adjusted price. Okay, so we can do the lapply class, okay, and merge, or we can just make use of the QMAO package. Here, I'm creating this PF object, making use of the price frame function from QMAO. So it will now merge the objects from those assets, 6 assets, and then just give us the adjusted price. And if there are any missing values, it will delete it. Okay, and then let's view this object. Let me run this. And notice, class, I'm going quickly over this because we have done this in the previous 2 sessions. So we now have the prices for IBM, Bank of America, etc. from sorry. From January to 2015 until December 29, 2023. Okay. So that was our PF object. Then from here, we can also get, using also QMAO, we can use the RF function to generate the returns. Okay. Now, actually, we don't need this, no? Yeah, sorry, we still need this because we will be coming from the get symbols. Okay, sorry about that. We will need this preferred. Type is equal to continuous. Okay, so NA.omit just to delete the first line which is missing, NA. So if I run this and then view it, we'll now have the red object, and it contains now the log returns of our assets. Okay. Sometimes sometimes people want that the returns be in percentages. So you can do that by just multiplying this by 100. Okay, so if I run this again, you'll notice now that our returns, okay, it's now 1.586%. This is 0.54%. So some people would want the figures to be in percent. Okay, so it's really up to you, but for our purposes, let me just put it back to the original, to the decimal place. Okay, so let me run this again, and went back to the decimal place. Okay, so let me pause for a while. Any questions so far, class, about generating the PF object and the return object? Okay, if you were able to follow along, kindly please chat. I'll wait for you to be able to be in the same place. And if you have any questions, please feel free to ask questions. There are 35, so I'm expecting, hopefully, I get more than 30 responses from the class. Okay, thank you so much, class. Thank you for your responses. Okay, then last time we said that we can get the, let's say, the individual returns. For example, if I want to get the average return of IBM, okay, for the whole period, then I just make use of the mean, okay, average, and the return of IBM. So let me run this. And then the return of IBM is, okay, so in this case, sometimes it might be better to put this in percent, okay? So that's around 0.0198. This is already in percent. So 0.019 or 0.02, rounding it off, 0.02%. All right, then we can also get the variance of an asset, okay? And we said that the covariance of an asset with an asset is, of course, the same as its variance. If I run this, you notice that it has the same figures, of course, and you can get the covariance of another asset. So the covariance of the return of VAC and PFE, you can also compute that. So this is the covariance. Okay, once again, class, I'm going to pause and allow you, if you want to copy some of the formulas there. And if you're done, class, if you're okay, kindly just please chat, please, in the chat box. If you're okay, or yes, you have done that. As I said, class, I'll go through this quite quickly because we have already done this before. Now, later on, when we go to the portfolio construction, then I'll be more deliberate. Okay, waiting for the others to chat their answers. Okay, thank you. Thank you, everyone. Okay. So we also learned how to get the returns of a portfolio. Okay. So by we review this class, what is the return of a portfolio? Well, the return of an asset, R sub I, will simply be equal to, okay, summation of the sorry, it will just be the average. We're not summing up here. Average of the return of the asset. Or yeah, it can be the sum of the returns divided by the number of observations. That's the average. Okay, but for a portfolio, we said that the return of a portfolio is the weighted average of its the weight of each asset multiplied by its return. Okay, so this is the return of a portfolio, and also we learned that the variance or the risk of the asset in terms of standard deviation simply the square root in matrix form. It's the weight transpose multiplied by the variance covariance multiplied by the weight matrix. Okay, and in R we have to put this as a weight as a transpose because when we generate an object in R, for example, let's say a vector of weights, the weights are actually are produced as a as a column matrix. So you have here, this is an n by one matrix. So n observations times times one. Okay, and then since this is an n by n, you'll have to get the transpose of this so that this becomes 1 by n. So now it can be multiplicable para n by n siya. And the resultant matrix is 1 by n. Okay, and our weight matrix is back to not transpose, so that's n by 1. So this is multiplicable, and the resultant matrix is 1 by 1. So the risk is a metric. It's a 1 by 1 metric. It's a quantity. Thus. Okay, and of course we get the square root of that. All right, so let's now go to the review of the computation. Okay, so if it's equally weighted class, then instead of using the formula, we can just use from performance analytics, we can use the return that portfolio. Okay, so here I just modified something here because what we did last time was we just divided 1 by 6 since there are 6 assets. So what we did was 1/6 and 1/6, 1/6, 1/6, which is not an efficient way to do that. No? So what will be an efficient way to do that? Let's create now an object called n, which will count the number of columns in our return in the returns of the assets. If we take a look at the returns, there are 6, 1, 2, 3, 4, 5, 6 objects there. So we can now create this object, n is the number of columns of red. Okay, so if I run this, so I can see now that our vector n is 6L. And what's the meaning of L? If you watch the videos at the beginning of the classes, L here signify that this is an integer. So it's a counting number. Okay, we don't need the decimal there. All right, then weights, we're going to have a repetition of 1/n, then n, 6 times. So the rep function allows us to repeat. What are we going to repeat? 1/n, 1/6, because n is 6. How many times? 6 times. So instead of writing 1/6, then gamma 1/6, gamma 1/6, etc. Imagine if you have a portfolio of 20 assets. Diba? So mag-repeat ka ng 1/20, 1/20. Right? So it would be better just to use this, the repeat function, and then 1/n, of course, identify the n, and then n times. Okay, so I'm going to generate this, and I can see that in my weights, okay, you have here the numerical vector. And even if it's written as 1 to 6.167, actually the size of this is six rows by 1 column. Okay, so this is very important when you write the formula for variance. Okay, so let's first make use of the function return that portfolio. The object is rep. Okay, and then we identify the weight. So what will happen here is that R will compute for the returns of this portfolio. So it will add this plus this, plus this, plus this, plus this, plus this, and then divided by 6, since this is equally weighted. So it's just the same as multiplying each of this by 1/6. So if we're going to compute this, for example, let me copy this. We just copy the first day, Control C. I'm going to copy it in our console, Control D. Okay, and then I'll just divide, add this. Plus, plus, sorry. And then I have here another plus. That's that, then plus this other number, plus this other number. So these are all 6. And then let's just add everything. I could have used just the sum, and then so that I didn't have to use the plus sign. For me, okay. Right. So that's the return of our portfolio, equally weighted portfolio for the first day. Our first day is that's January 5, 2015. Okay, so let's compare that. If we're going to make use of our return that portfolio, okay, return that portfolio. So we're creating this object rep port. make use of the return that portfolio from the performance analytics and identify the portfolio, which is red, and then identify the weights. The weights we have already created this one. Okay, so if I run this, control enter, and then I view this. So let me view that portfolio. And negative 1.99 times 10 to the negative 2, yeah, it's the same. 0.0192226. Okay, so we got it. That's how we get the portfolio returns, and there are 2263 observations. So there are in your rec, so there should be 2263 also in your portfolio returns. Then we can just change the name. Say ang pangalan ng that portfolio natin medyo mahaba. I don't like the name. So we can just the portfolio that returns yung pangalan ng column. So I'll just change it to red underscore portfolio, which is the same name as your object. Okay, so if I and then okay, so nabago na no, red portfolio. So red underscore portfolio. Okay, so I know I'm going quite fast. So once again, let me pause for a while and allow you to catch up because masyadong mahaba na yung o mabilis yung pace ko. I pace my quite fast. Okay, kindly please chat if you're able to. Okay. Okay, thank you. Okay, thank you so much, class. Okay, may question. Christian, paki-share yung question mo sa iba. My question dito, class, and then I'd like you to answer this question. Okay, can anybody, class, answer this question? Question ni Christian. The code for the weight, same lang po ba sa 1/6? Anyone, please? Hindi, sige, ganito. Christian, sige, tingnan mo yung code na to. Sige, please answer this. What will this code give us? Christian, pakisagot, no? Yung N call ret. Ano answer niyan? Christian, pakisagot please.
Sir, yung returns po.
No. Itong N call. So here, I'm creating this object N is equal to N call ret. Ano ibig sabihin ng N call? Rinan mo ba to?
Yes, sir.
Kaya pala. Dapat rinaran mo. Class, what does N call give us, class? Okay, hindi mo naman trinay Kaya tapos, paano malalaman yung sagot, Christian? Dapat trinay mo. Okay, class, what will this code give us, class? N call? Unmute na lang, class. Unmute, please. Unmute yourself. Okay, number of columns. Yan, Christian. Number of columns, no? So, sige, Christian, pakasagot. Anong answer dun sa N call ret?
Yung number of columns, sir.
Huh? Sorry?
Sir, yung 6, yun to po ba yun, sir? Yung 6L sa values po.
Meron ka na bang ret object?
Meron po, sir.
Ilang columns yun?
Yung ret object po, 6 po.
O yun, 6. So ito 6, di ba?
Yes, sir.
Okay, and then here we wrote this code, no? Rep means repeat. Okay? 1/n. Ano yung 1/n, Christian?
1/6 po.
O, di ba? Tapos anong tong n? How many times?
6 times.
O, di pareho ba? Answer your question.
Opo, sir. Gets ko na po,
Yun,
sir.
pareho lang din, okay? Okay, thank you for your question. No, pero sana ginawa mo muna to, no? Para nalaman mo, na-check mo on your own, okay? All right, any other
Opo, sir.
questions? Okay, thank you, Christian. Any other questions? Yes, Joseph.
Sir, ask ko lang po if merong difference kasi upon checking yung sa ret po natin, may difference po sa decimal. Pero on the later end na po siya na difference.
Difference sa decimal, itong red port. Ito?
Opo.
Saan later part? What do you mean?
Sir, yung sa akin po kasi is negative 1.922064.
Negative 1 point, ano?
922
922
064.
064. Okay. Most probably surrounding off na lang yan, no? And anyway, that's a very, very small, ano naman, no? Small number. So,
Sir,
I don't think that will be quite material. Pero tingnan mo ano yung, sige, just to be very specific about this. Ano yung first, ano mo ng IBM? Ano yung return niya?
negative 0.015860117 po.
121?
Opo, 1217.
At teka muna, sandali baka nagkaiba tayo ng dates Sandali. Punta tayo sa ret muna, no? Okay. Sa, nasa ret object na pala tayo. Wait. Alright. Ano yung start mo?
2015-0105 po.
05 ka kasi.
Pero yung sa start po, nalagay ko is
11. 11 yung lagay mo?
Opo, 0101.
Okay, class, ano yung first, Bagay 15 din ako eh. Ano yung first date nyo sa January, class? January 5 ba? Class? Okay, January 5. So pare-pareho tayo, no? Pero, you're saying here that your returns here is different. Tama ba? Kasi,
Yes po, sir.
sige, I'll stop share. Can you show your screen?
Sige po, sir.
Tingnan natin kasi dapat pareho yan kasi pareho lang naman yung source ng ano natin ng
Sir, naka-disable po.
sorry. Okay, sige.
Ito po, sir. Full screen ko lang po. Ayan po yung sa akin.
Kinukuha yung mo, yung get symbols mo. Ayan, sige. Start. May see the start. Tama naman. Tama naman yung dates. Tapos yung get symbols natin, tama naman. Okay, sige, down please. Start and adjusted. Right. Okay. All right. Tama naman. Sige, down nga. Yung yung red, natin.
Ito po.
Yung, nga. Wait. Balik lang, balik. So, red natin, tama naman yung red mo Okay, tanong ko lang yung iba, class, paki-flash na ulit yung red object mo. Okay,
Ayun.
who among you class are getting this? I-head mo nga yung ano, head mo yung red,
Ano po, sir?
head. Sa console, i-type mo head.
Console.
Yan, head. Red. Tapos 1 lang, comma 1. Sige nga, run mo nga yan. Okay, 0.01586 or 12. Plus, may I ask you, who among you got this return for IBM? Meron ba? Paki-chat kung yes o no. No, ibig sabihin, hindi kanya yung nakuha. Okay, no. How about the others, class, please? Okay. Okay, no. Ngayon mo lang rin Anto, no?
Opo, sir.
Okay, so right now, Joseph, sorry, hindi ko ma-determine kung bakit. Even I'm surprised why we're getting we're getting different, I-open mo nga si IBM
Like,
dito sa baba, object. Click mo siya, parang view, yan, sige. I-view mo siya. Class, ano yung adjusted price nyo for IBM? Can you please chat? Yung adjusted nyo for January 2 and January 5. Can you please chat, please, class? Ano yung prices nyo for IBM adjusted? Is it 103,54482? 548. Tama, pareho din. Payments. Class, pareho lang ba dun sa adjusted sa January 2? And also for January 5, pareho lang ba na 101,72853? Class, pasagot naman please. Hello everyone, please answer. Okay. 857 for January 2. 852 for NIBS. 7285. 2853. So surrounding, baka surrounding off. Kay Justin, 103. $101. 72857. So may konting sa may konting discrepancy. I don't know why. Pati nga ng get symbols mo.
it's,
Inulit mo ba to? Nasa taas ba to kanina?
sir, opo. Ito rin po yung kanina. Pero bagong quant mode po ito. Ay
Bagong
markdown.
RMD. So
Opo.
pareho lang yan, no? Okay. So tama naman eh. Okay. Joseph, ganito na muna, Kasi I can't, hindi ko alam kung bakit, bakit magkaiba. Anyway, the difference is marginal, is very minimal. So ganito na muna. Let's just accept what you have there. No? Maybe let's just try to see kung bakit nagkakaiba yung ano, yung values, no?
Sige po, sir.
It should be the same kasi historic yan. So isa lang naman yung pinanggalingan. No? Okay, but thank you, Joseph, for that question. No? In the meantime, tuloy na muna natin to, no? Kasi for us ngayon, ang importante, maano natin yung ano, yung maabot tayo sa ano, sa optimization sa initial steps ng portfolios. Okay. All right, thank you. So that's something that we saw now na although ano no kay Joseph lang, sa iba hindi eh. Pareho yata sa akin. So maybe I don't do sa previous code, I don't know, no? So ngayon hindi ko masasagot yan, Sep, no? Okay, but let's try to explore what happened. All right, there should not be any difference. Okay, so sana ako, class? Am I done with line 85, class? Ito. Si Redport, nabago na natin yung pangalan, ano? All right. So now, okay, just by way of review, sabi natin na yung portfolio variance can be computed using matrix algebra, which is really a lot better way to do it. No? Okay, so compute muna natin to, class. And what we did last time was to compute for the covariance matrix, which is just the covariance of your ret object. This is a six column object. Okay, and then we said that we have to make use of the T transpose function kay R kasi itong weight natin is listed as one column, no? So it's 6. Ang weights natin is 6 by 1. And we cannot multiply that with a 6 by 6 matrix. All right, so let me run this, generate the cov matrix, and it generates this one. Okay, so the diagonals are your variances. That's why this is called your variance covariance matrix. Kasi yung diagonal natin, they are all variances. Kaya IBM with IBM, BAC with BAC, they are all variances, but the others are covariance. And we know that the covariance of BAC with IBM is the same as IBM with BAC. So dapat pareho lang yan, class. So they should be the same. All right. So we're done with the covariance matrix. So we can now multiply this into the transpose ng weights object multiplied by the covariance matrix multiplied by the weights matrix. Okay, and we should generate a number, class. Yung variance ng portfolio natin. Okay. So ito, no? It's a number. So if we get the structure of the var underscore port, the structure of that, notice, class, it's a hindi siya ano, no? Hindi siya numerical vector, no? It's a 1 by 1 array. Notice here, it's 1 and then 1. Row 1, column 1. Just like the cov matrix a while ago, str cov matrix, diba? The structure of this is a iba to, sorry. Kasi ano to eh, it's a variance covariance. So ito siya, no? It's an array, class. 1 by 6 by 1 by 6. Okay? Okay, so balik tayo dito sa ano, sa sorry, not 1 by 6 ah. 1 to 6. Okay? Ito, class, ito ibig sabihin ito 1 to 6 yung rows natin, 1 to 6 yung columns natin. Will this give us the class? Okay, yan. So this is what I wanted to show. It's a matrix, it's an array. It's not a vector, class. It's not a vector. That's why if you see here class in the objects, global environment natin, yung var port, okay, nandito yan sa ano sa data, no? It's not in the values because sa values ang linalagay lang diyan mga vectors. Okay, ito class, it's a matrix, it's an array. Same thing with the this one class, yung var port natin. It's also a matrix. All right, and then we can compute, of course, for the standard deviation, which is just the square root of your variance. So this is, okay, that's 1%. No? So that's the standard deviation of our matrix. That's the risk of our portfolio. Okay, so last time we also did this class just to review. Okay, review lang natin to, no? Okay, so I'll just share this with you kasi nagawa na naman natin to. Control C to save on time. Okay. We have to reach a certain portion here. Okay, so just by way of review class, I'm generating this object, ret port. Yung kanina ret port lang, walang rebalancing. Ito may rebalancing. So the function is still return that portfolio, but this time we will have to define yung rebalance on, which we did last time. And we said that we can rebalance this weekly, monthly, or quarterly, or even annually. Okay, and if you run this class, we now have this object, ret port rebalance. Okay, and this one, the computation for this one is now rebalanced. And we said that this would be the same up to March, up to January 31. And then the following day, may rebalancing na. So may iba na to compared to our portfolio ret, no? Portrait. This is the portfolio ret rebalance. Okay, and then we can run this. We can put in one data frame our ret port and ret port rebalance, and then compare their annualized returns, assuming that the risk-free rate is 6%. Okay, so here we also change the name of the column for our ret port all. Okay, so if we run this class, it will now generate the annualized returns. And you can see here that the annualized return for the monthly rebalance is higher than the one for the non-rebalance. And then, however, it's riskier. It's 0.22 annualized standard deviation. This is only 0.21. And then for the annualized Sharpe ratio, they're both negative. But this has a smaller negative as compared to this one. The rebalance. Okay, so I won't discuss that anymore because we have done this last time. Okay, so let's now go to portfolio optimization. Okay, because what we have done is just compute for the return of the portfolio, okay, and then the risk of the portfolio, okay, just by using the equally weighted, the 1161616. Now the question is that the optimal way to create your portfolio? You remember, class, what we discussed a while ago, the efficient frontier. Okay, so if we generate several portfolios, of course, when we say several portfolios, different portfolios, I'm saying that we create a combination of different weights. Okay, so it can be 10%, 10%, 10%, and then and then maybe 10%, 10%, and then 50%. Okay, so you're creating a portfolio of different weights, combinations of weights. Okay, so that's what we're going to do now, because the equally weighted portfolio might not be the optimal portfolio. That might not be the best portfolio. Okay, so we're going first to create a portfolio of two assets. So let's create this object port one, where from the ret object we just subset, we just get the first two columns, IBM and the Bank of America. Okay, so let's run this class. You can easily write that code. So we're creating this object port one, and then let's view port one. Okay, so we should have the IBM and the BAC. close some of the objects here. Okay. All right. So you should have been able to create now this object called port1. Okay, it's an XTS object containing the IBM and the BAC returns. Okay, this one. Okay. So next class. All right, sorry, I failed to discuss this. So when we're using the portfolio analytics, portfolio optimization method, we have to do these steps. Number one, define the portfolio returns to be optimized. Okay, and the portfolio object. Okay, so kindly just add this. We define the portfolio returns, and then we define the portfolio object. Step 2 is we add the constraints required. Okay. Step 3, we add the objectives. Step 4, we optimize. Step 5, we extract the weights and other measures. And then step 6, we generate the other outputs and chart tables. And then at the end, we will create the efficient frontier. Okay. So basically, those are 7 steps. All right. So we have created already. Our first step consists of this one. So let's create the port1, the one with the returns. And then let's create our portfolio. Same thing, class. We're portfolio returns. We're creating this object n, which is n column port1, so that should be 2. And then same function, return that portfolio. So we're creating this object port1 returns. So this is coming from port1 here. Okay. And then the weights is, rep of 1 over n and n. Okay. And then this will generate this object, port1 rep. If I run this, so I'll have this, and then the default column name is portfolio that returns. Okay. And then I just want to change the column names of port1 rep, this object, into port1 rep. Okay, so if I run that, then take a look at port1 rep again. It's now port1 rep, the name of the column. All right, let me pause for a while, class, and give you time to run this code chunk. And then once you're done, kindly please chat. Of course, class, it's okay not to put this. You know this already. Return that portfolio. Okay lang natanggalin na to. Kindly chat, please, if you're done with this code chunk. So let's give a few more seconds to the others. All right. So we can plot the port1 returns. Of course, if we compare, for example, plot port1, this will contain 2 plots because port1 contains the returns of IBM and BAC. So if I run this, okay, you can see here for port1, since there are 2 objects there, we can put here the legend that the location is equal to Let's see. Top right. Top right. Oops, sorry. Top right not found. Sorry. They should be in quotes. Just for us to know which is which. Okay. So let me run this both. All right. So here you have the black one is IBM. The black one is IBM and the Bank of America is the green one. So it's in some portions you have greater volatility for IBM. I think in more portions you have greater volatility of the returns for BAC, the red ones. Okay, I think in several places the returns. I mean, so this is a measure of the returns. The returns of BAC were more. Okay, and there was more clustering for BAC. Okay, but that's not our topic. I just wanted to show you this one. The second one is just for the portfolio. Okay. All right. So we have generated the port one ret object, this one, which is the returns of portfolio returns containing IBM and BAC. Okay. Then we have now to create this one. Okay. So this is actually the first step. So we're creating this object port underscore spec one. And it contains this one, portfolio analytics. So this is now coming from portfolio analytics, and then portfolio.spec. And then we define the assets. The asset is the column names of our port one. Okay. So before we run that, let's just take a look at sa viewer class sa console. Lagyan natin yung portfolio spec. Okay. What's happening to my arm? All right. Then this will lead us to. Sorry. I'm having an internal server error class, no? So which means I cannot access the help function. Okay, so I'll just have to get this from the internet, but that will take us a long time. Okay, so kindly just see what this means, class. Itong portfolio, but let me just try. Baka dito sa nag-ano ako eh, internal server error. Okay, I hope I'm able to. Ayaw class. Okay. Even in find a topic portfolio. Okay, ayaw niya. Sorry about that, class. I can't access my help function. All right, so where are we now? We have to reach step 3 to make us on the same page as the other section. Okay, but we have generated this class, port spec 1. As I said, this is just like a container. Okay, so we create this object, and then it will be a container that we will put the other elements in our portfolio. Okay, doon natin ilalagay yung elements ng portfolio natin. So let's take a look at what this is. Let me just go to my environment and port spec 1. Have I run it? Hindi ko pa na-run ka, sorry. So let me run this. Okay. and I had it printed here. So this is my port underscore spec one. All right. So this is the formula, and it contains two assets, assets ABM and BAC. And if I look at the object here, okay, port here class. So it's a list. So open this, and it will tell us that this is a list. So what's inside this? So it's a list of 6 objects. Okay, 1, 2, 3, 4. Okay, 6. Okay, one assets, 2, 3, 4, 5, and then the call. So you have assets, category labels, weight, sequence, and then constraints, objects, and then objectives, and then call. Okay, so this is what we're going to fill up. Okay, so far, what we have done is just fill up the asset side. The assets that we're looking at is IBM and BAC. And the default is the weight is 50-50. Okay, so we haven't filled up anything here. Okay, so let me pause for a while, class. Is this clear so far? Is this clear? What we're creating? Let's take the structure of port spec one. What is this object? So it's a list, as mentioned a while ago. It's a list class. Okay. Were you able to run class yung port spec one? Let me pause for a while. Kindly chat please class, because this is very important. You will not be able to get to step 2 if we don't have step 1. So we have to create this first. And using portfolio.spec, okay? Okay, good. All right. Now, the second step is to create our the second step is to create add constraints here. Okay, so this is step 2. Okay, so let me share this with you. Control C. So this is coming from the portfolio analytics. Oh, sorry. Let me chat. And let's go to this site, class. Let's go to this site. This one. The R documentation for portfolio analytics. In particular, the add that constraint. So this is what we're going to do now. Okay. So this is the documentation for portfolio analytics, and then the add that constraint. So it's a general interface for adding and or updating optimization constraints. All right. So what are constraints? These are limitations. So we're creating an object class. So this says this is the main function for adding or updating constraints to the portfolio spec. So we have first to create the portfolio spec, and then from there we add the constraints. So this is the generic syntax for that. So ano yung arguments dito? First portfolio, it adds an object of class portfolio. So this is what we created already a while ago, the port spec one. Okay, and then type. Okay, so these are the different types that we can use. Weight sum, which is also leverage or weight. You can use box. You can use group, turnover, diversification, position limit, return, etc. Okay, so these are the types that we can use. Okay, and also, okay, so here there are details. The following types may be specified: weight sum, weight leverage. Okay, can also see this. Let's see this class. So you can also use full investments. Hindi nakalagay dito, no? Pero right? Here class. You can also make use of this, no? type is equal to full investment. Okay, you can also use another type here. Okay, so there are different types that you can put in the add constraints. So let's take a look at some of them. Okay, and how is it written, class? Okay, so I'm using the same object. As I said, this object is like a container. Okay, so first we identify the assets. Next, we will put here, okay, add that constraint this time. Okay, so we're using the object, the portfolio is port spec 1. This was the portfolio that we created a while ago. And notice we're still remaining it the same. Okay, we're now putting in more quote unquote attributes to our container. And then here I'm using type is equal to full investment. Now, what do we mean by full investment? Full investment, class, dun sa second na tinignan natin. Okay, so let me explain that here. Special classes for the weight sum constraints are full investment and dollar neutral or active. So let's just use this. Type is equal to full investment. It means, class, that the minimum sum is equal to 1 and then maximum sum is equal to 1. Okay? Minimum sum is 1 and maximum sum is equal to 1. So what does this mean? Minimum sum 1 and maximum sum is equal to 1. It means that when you sum up all the weights, okay, it cannot be less than 1, it cannot be more than 1. So that this is what we mean by full investments. Okay? The whole amount. For example, that the amount is 1 million. So 100% of that 1 million will be invested. Okay, that's what we mean by full investment, because the minimum is 100% and the maximum is also 100%. So the minimum cannot be, the minimum sum cannot be 99%, or the maximum sum cannot be 101%. Okay, so that's what we mean by full investment. All right, so let's run that, class. Okay, I think we'll be able to catch up with the first class. I'm going to run this port spec 1 still, and then add constraint, control enter. All right. So if I take a look at port spec 1 here, what happened now? So assets still there, okay? Double, which means the values of the assets, because these are the returns, okay? IBM and BAC. And then the constraints, now take a look at this. You have a list of length 1, okay? If I click this, class, then we have here, it says, it's a list of 6 also, weight sum constraints. So it's coming from the weight sum, and what's that, class? The minimum sum should be 1, the maximum sum should be 1, class. Okay, so the type is full investment, and it means that the minimum sum is 100%, the maximum sum is 100%. All right, so that's the constraint that we place there. Okay, so as I mentioned a while ago, there are other constraints. So for example, this can be another constraint. So let me share this with you, class. You can put it inside your code chunk. Again, in the interest of time. Okay, so take a look at this first one. Let me put a space here. Let me remove the sign. Okay, so add that constraint, portfolio is equal to port spec 1. And then here, the type is not full investment, although full investment is also a type of weight sum. But here, I'm saying type weight sum, and then I'm putting here the minimum sum can be 99%, and the maximum sum can be 101%. So this relaxes a little bit your constraint. And why is this allowed? Because sometimes the software or the package might not be able to generate a solution with this very limiting constraint. Okay? Kasi full investment, ibig sabihin talagang 100% yan. I don't know if you have done optimization in Excel, but sometimes if you make a constraint that the sum of the weights should be equal to 100%, sometimes Excel says that he cannot generate a solution. Okay? And it's likely because of this very strict constraint, strict limitation that the sum should be 100%, no more, no less. Okay, so sometimes this might be needed. Okay, you may allow that the total sum of the weight should be 99%, or maximum should be 101%. A 1% increase or a 1% deduction. So it's sort of a range. All right. But for now, let's not use this. Okay. So we will just stick it with the with this one. Okay. Then there's also another one. This is long only. Okay. If you go back to our documentation here. Okay. So here we have weight sum, full investment, okay, or dollar neutral and active. Okay, special case to set minimum sum equal to 0. Okay. Here you have class long only. Okay. Long only class, and this will set, notice class, this is not minimum sum, this is minimum. Okay, and maximum. Okay, this means class that your asset, your weight can have a 0%. And the others could have a 1. So if you're setting an asset to have weight equal to 0, it means that it will not be included in the portfolio kasi 0 yung weight niya. Okay? And pwede yung isang asset lang, kunyari you have an portfolio of 10 assets. Tapos, ilalagay mo tong long only na to, ibig sabihin, pwede siya mag-create ng portfolio na yung isang asset, one asset will be your portfolio. Kasi class, di ba, pag maximum is equal to 1, and then full investment ka, that means that one weight will be 100% and the others will be 0. Kasi dapat all the sum will be 100%. Okay, do I make sense, class? Do I make sense? Nakuha nyo, class? Isulat ko nga yun, no? Okay, kasi class, pag ganito, no? Let me, okay, I'm running out of time. Annotate. Okay. If you're saying that the sum of the weights should be equal to, sum of the weights should be equal to 1 or 100%, about 100%, then what does that mean? If I have here the weight 1, weight 2, kunyari, we have, let's suppose we have 4 assets, no? So each asset will be given their weights. Okay, so if we have this long only, okay, this long only type, then that means this one can have 0, this one can have 0, and then this one can have 0. Kasi may minimum sum tayo na 0, and then this one will have 1. So it means that we're creating a portfolio now with just one asset. Okay, the rest will be 0. So this will happen sometimes if you're, let's say, gusto kong i-maximize yung profit, i-maximize yung returns. So ang gagawin ni kung may long only tayo, ang gagawin niya, ilo-load lang niya lahat ng weight mo dun sa pinaka highest na return ng asset. Remember, class, that each of these assets have their returns, no? Okay? So, hahanapin niya yung asset na pinakamalaking returns, tapos dun niya ilo-load. 100% dun. The rest will be 0. Right? Or, if you're looking now at a asset, at a portfolio where you're minimizing the risk. So, ang gagawin niya, kukompute niya dun sa yung risk ng bawat asset, yung 1, 2, 3, 4. And then, since long only tayo, ilalagay niya 100% to the asset with the least risk. So, kunyari, ang asset number 4, after computing for the risk, no? Iko-compute niya kasing risk. Tapos, si asset number 4, ang pinakamaliit na risk. Tapos, ang objective natin is to minimize risk. So, ang gagawin niya, 100% dito kay asset 4. tapos the rest should be 0. Okay? So that's what happens when it's long only. No? So yung iba, kasi ang gusto nila, so pwede natin gawin na wag long only. If we don't want the long only, ang gagamitin natin si box ito, class. This one. So this is the alternative to this one. So let me comment this out. So ano tong si box? Type is equal to box. And then you can now identify kung ano yung minimum na weight at saka maximum na weight. Okay? So for example, this one will tell us ang minimum na weight na ibibigay sa assets is 10%. So ibig sabihin hindi pwede ma-zero out yung isang asset. Okay? Kasi it will be given a weight of minimum 10% and no asset will kunyari ilalagay ko lang dito 0.5. Ang maximum na weight na ibibigay in any of the asset is 50% lang. So that no asset will really dominate the portfolio. No? Okay, maximum kasi 0.5 or this can be lower. It depends on what you want. Okay? Alright, so sige nga class, paki-run natin to. Yung port spec 1. Again, same we created that same object, that same container, and then we're just adding constraint to that. Okay? So, hindi natin ita-type yung weight sum. Ang ilagay natin dito, hindi yung type long only kasi, ano to, no? Kasi, ito, minimum 1, 0 maximum 1. But if you use this together, class, ma-overpower nito, itong type is equal to box. Kasi pag naglagay ka dito ng minimum is equal to 0, pero ito minimum is equal to 0.10, magpe-prevail tong 0.10. Okay? Kasi if you put here, minimum is equal to 0, tapos minimum is equal to 0.1, ang magpe-prevail dito yung 0.1. Kasi yung minimum na 0.1, it will still not violate the minimum is equal to 0. Pero yung kung linagay mo na weight is equal to 0, it will now violate the minimum is equal to 0.1. Okay. I hope you're getting me, class, no? Okay, so na-run ko na tong isa kanina, no? Na-run ko na to. I'll just run this one now. Okay, Control Enter. So nagdagdag na naman ako ng panibagong constraint. So if I look at my port spec here, now you can see now I have now 2 constraints here. Yan. I now have 2 constraints there. So the rest are still the same. Wala pa tayong objective na linalagay. No? Alright, then if I check this, ang unang constraint ko is that ito yung full investment o yung weight sum. Tapos pangalawa naman, box constraint. Okay, if I check this out, yan no. Ano ibig sabihin to? Minimum ko 0.1, 0.1. Bakit 0.1, 0.1? Sa stock ko na IBM, 0.1 yung minimum niya. Sa stock ko na BAC, 0.1 din. Kay maximum naman, ang maximum na weight na ibibigay kay IBM is 0.5. Maximum din kay BAC is 0.5. Alright? So ito yung call na yun. Ito yung constraint na yun. Type is equal to box. Minimum is 0.10. Maximum is 0.5. Alright. Okay. So pause again ako, class. Medyo magta-time na tayo, no? Kamusta, class? Kamusta? Are we clear on this? Tapos may note lang ako dito, no? Control C. Okay, and then let me chat this in the chat box. Just to define what is a long position and a short position. Sa investments class, meron tayong tinatawag na term na long position. Okay, what do we mean by long position? Pag long position class, it means that you own the stock. Okay? You own the stock. Okay, bakit ka nag-own ng stock class? It's because you expect that that stock will increase in value in the future. Okay, so you have a long position, for example, in IBM. You have a stock. You have that IBM stock in your portfolio. So long ka doon, no? Now, it's the opposite of having a short position. Ano yung short position naman? A short position class, ito hindi pa pwede sa Philippines, no? But I heard ano na to, no? Ipapayagan na. You're selling a stock that you do not own. Okay, pwede ba yon, class? Not in the Philippines as of the moment. So you cannot sell a stock that you don't own. Pero sa US, pwede. So you can have a short position. So if you know somebody who owns a stock and he can lend that stock to you, so hihiramin mo yung stock na yun, tapos ibebenta mo. Now, bakit mo siya ibebenta? Kasi ang paniniwala mo, you have this belief or ang estimation mo that that stock will go down in value. Bababa yung price niya. So kunyari, hiniram mo siya, no? Hiniram mo, the value of that stock at that time is 100. 100 kunyari. And what's your motivation for shorting that stock? Kasi maniniwala ka na bababa yung price yan. Alright, so you now have this stock that you borrowed. Okay, tapos anong nangyari? Bumaba yung stock. Okay? Okay, so you have the borrowed stock, no? Tapos you sold it, no? At 100. Tapos, the price of that stock dropped later on. Kunyari, naging 91 siya. Ang laking drop, di ba? So, bibilhin mo ngayon yung stock na yon at 91 pesos. Diba? Tapos, ibabalik mo na sa owner. So, ano nangyari? Nagkaroon ka ng returns, di ba? Kumita ka. No? If the price of that stock rises and you buy it back later at the lower price, then you incur a profit. But if the price of the stock goes down, and of course you'll buy it at lower price, then you earn. But if the price of the stock rises, then you will have to buy it back later kasi ibabalik mo no? Then mag-i-incur ka ng loss. Okay, so that's what we call short selling. All right. Okay, anyway, so, and then for number 3 class, okay, I have a few more minutes. So I'll just share this code with you. No? Control C. And we'll stop here. Kasi dito din nag-stop yung kabilang section. Control V. Alright, so what are we doing here now? Pumupunta na tayo sa step 3 class. I-add na natin yung objective. Ano ba yung objective na pwede? Number 1, minimize risk. That's an objective. Number 2, maximize returns. Or number 3, a combination of both. No? All right, so let's start first with minimizing the portfolio risk. So portfolio risk minimization. All right, what I did here, class, was to create another object, port min var, minimize the variance. No? And it's just the same as port spec 1. So I just want to preserve this object kasi mamaya gagamitin ko ulit to, no? Yung port spec 1 natin na may dalawa ng constraints ito. Okay? Dalawa ng constraints at saka isang yung assets na na-identify na. Wala pang objectives. So later on, class, with another objective, magagamit ko pa rin tong port spec 1. Okay, so now I'm creating this object called port min var, which is also port spec 1. Pero ngayon, mag-add na ako dito for port min var na wala kay port spec 1. No? Okay, ano i-add ko? Add that objective. Okay, ang portfolio ko is port min var, no? Okay, ito na. I don't want to use yung port spec 1 kasi mamaya gagamitin pa natin to, no? And then type is equal to risk. And then name is equal to standard deviation. All right, so now we're setting the objective now, which we're going to use later on, next meeting, pag i-optimize na natin yung portfolio natin. Ito na, yung optimize that portfolio. So this will now create the portfolio where the objective is met, no? So anong function natin? Add that objective. Ang type natin risk, ang name is standard deviation. And let's view this class. So run natin to. And if you view this class, notice, andun pa rin si dalawang constraints, may objective na tayo dito. Objective is now 1. No? So if I show this, you have here, okay, name, standard deviation. No? Target, wala pa. Arguments, multiplier, and then the call here is add that objective. Type is equal to risk, and then name, standard deviation. All right. So let me put this back. Okay, so far class, ito na yung nalagay natin sa sa container natin. So dalawa na yung container natin dito, yung isa port min var, this is for the portfolio minimization, pero na-retain pa rin natin yung portrait 1. Kasi mamaya, next meeting class, mag-o-optimize naman tayo, magma-maximize tayo. So gamitin lang ulit natin tong port 1 rate na to, no? Hindi, asan yun? Port spec 1 pala, sorry. Port spec 1 to maximize. Para para yung steps natin, class, masisave natin yung steps na yun. Okay, so I hope you learned something today, class. I know this is medyo mas nagiging challenging na to. No? Let me stop recording first.